We are less than 1 week away from the US presidential elections, and so much has been written about which stocks and which industries will do well depending on who the next president is. So today I want to go over the stocks and industries you should have in your portfolio, depending on who wins the US presidential election in a few days. All right, let's roll the intro. Welcome back to the channel. My name is Martin Zeman, and for those of you that are new here, I'm a former investment banker, trader, and a hedge fund manager. And I make a lot of content focused on stocks, on the world of investing and trading, and generally speaking, personal finance. And so today there's two things I want to talk about. The first thing I want to talk about is which stocks and industries should do well depending on who the next US president is, whether Trump or Biden win, which both have very different policies and both obviously focus on very different industries. And the second thing I want to talk about is my personal shopping list, my personal picks, the stocks that I focus on for the next 6 months as we enter this period of uncertainty. We're actually not even sure if we will know who the US president is on the 3rd of November, but mostly we're entering the second wave of COVID-19, both in Europe and in the US, and that creates just a lot of uncertainty and market volatility. All right, so Trump versus Biden, and this is not a political video, this is purely looking at the stock market and which stocks and industries should do well, right? If you look at the history, first of all, of the last 25, 30 years, and you look at the stock market's overall performance as an index based on who the president was, it actually doesn't matter if it's a Democrat or Republican. Despite the hiccups in 2001, the dot-com sell-off, the global financial crisis in 2008 and 9, it almost doesn't matter who is in the White House. But let me show you this chart here. If you look at this chart here, you kind of can look at a basket of stocks that my friends at Wells Fargo put together based on various industries and what you can expect a Trump administration or a Biden administration will focus on. And so when you think about a Trump basket, right, for example, that's obviously less regulation around Wall Street, more friendly attitude towards energy. Basically, you look at sectors that are around kind of cyclicals, around financials, materials, industrials, right? And on the other hand, you have Biden, obviously, that is going to be more friendly to the tech sector, obviously more friendly to renewable energy and less friendly to the traditional oil and gas industry. So, looking at just a few of those companies in the Trump portfolio, for example, you have obviously Lockheed Martin and Boeing company, the aerospace industries, Caterpillar and Deere, the machinery, and the traditional oil and gas companies. You kind of name it, any oil and gas company there. But looking at the Biden portfolio, and you've seen it in the Senate hearings recently, obviously the GOP Republicans are very hard on the tech companies. So you can expect that if Biden wins, the regulation around tech is probably going to be less stringent. It's probably going to be more regulation around finance. And you're going to have a lot more friendly attitude towards renewable energy. And by the way, this was a good point in the second debate, the last presidential debate between Trump and Biden. There was a lot of noise made about what Biden said, where he basically claimed that his stated goal is to transition away from the typical energy industry to renewables. And a lot of noise was made around there, as in, look at the states in Texas and Oklahoma and Pennsylvania. And so very few people actually know that if you look at the 4 states that are the biggest energy producing states in the United States, so you have Pennsylvania, Kansas, Oklahoma, and Texas. So in those 4 states that really produce the bulk of the US energy, more people are today employed in the renewable energy sector than in the traditional oil and gas. So, when I look at kind of which portfolios and which industries will do well, and specifically with this energy sector, I always love to quote this old quote of RBG that, we don't have to ask for the permission of the courts for the country to change. The country's already changed while we're just sitting by, right? The country's already moving from the traditional energy sectors to renewables. So if what the polls are saying at this point, that we're going to have a Democratic sweep, we're going to have the Democrats in the Senate, obviously the Biden presidency, you can expect companies in the renewable energy sector, whether it's producing energy, whether it's car companies like Tesla and other EV stories, to do really well. The second point I want to talk about is the state of the market as we enter the US presidential election, but also my personal picks as we enter kind of the last 2 months of 2020, and 2021 obviously is around the corner. So look, there's a couple of people that I follow in the market that have really original thoughts and have demonstrated that they are really good stock pickers and understand the markets well. One of them is David Einhorn, who obviously famously called Lehman Brothers out in 2008 before Lehman went bankrupt, who called the stock market an enormous tech bubble, which we're seeing the beginning of a correction here just a few days before the US elections. And the other person is David Rosenberg, who tweeted recently, why is it that everybody's saying that the US economy is doing fine, and at the same time the same people are saying we need a massive stimulus? And so look, I think we have seen this. This is the week, I'm filming this at the very end of October, where we just had 2 or 3 consecutive days with meaningful sell-offs, just like we saw before the summer. You can kind of think about where we were before this sell-off. We were at the highs in the S&P 500, the 3450 level, and the VIX was trading at 25. And that doesn't make sense, right? If you're at the highs in the stock market, the VIX should be somewhere around 15. So the VIX was telling you something was off. Today, VIX closed at 40. The second point is you have COVID waves in Europe, again, producing shutdowns across Europe, right? Small countries in Eastern Europe like Czech Republic and Slovakia, but also Germany, France, are again locking down half the country, and we have rising cases in the US. So we're kind of heading into this period of really instability and market catching up with the risk and the uncertainty. We don't even know if the election will actually produce a winner on the election day. But at the same time, I think it's important to have a shopping basket, have a basket of companies that you want to own at the right valuation, right? I think it's wrong for people to trade and invest based on trying to catch the very bottom and sell at the very top, right? You need to have a list of companies that you know the story of, where you believe in the story and you know the company and you want to buy them at the right valuation. So here's a few companies that I focus on, and I start focusing right here as we enter the second wave in the US for COVID-19. At the companies that will do well once we are on the other side. And I said this in the context of what we had just seen in China this week. China showed a 4.9% GDP growth. Their domestic air travel is back at the pre-COVID levels. And at some point, we are getting much closer now to a vaccine, or to several vaccines. And I think the market will start discounting that once we start getting better news on that front, right? Which is probably somewhere around mid-November to mid-December. And so here's a few companies that I focus on. First of all, a few airlines. You have seen my previous video, on the last video that I published on this channel. I talked about a few airlines that will do well on the other side of COVID-19, and the airlines as a group just sold off massively. So my favorite airlines here is United Airlines, and I talked at length about why United makes sense in the previous video. Skywest, which is a regional carrier that not many people focus on, which is reporting tomorrow. Skywest flies for the 4 major carriers in the US. They fly for American, Alaska, Delta, and United. They fly at 60-65% capacity during COVID-19. During this whole time, they're actually flying at almost 2/3 of their capacity, as opposed to the major carriers, which are only flying at 30% of their capacity. So Skywest, I think, is a great pick. In the long run, this is a company that's going to be up 60-70% within the next 12 months. The next sector that I look at is GM and the car industry. So General Motors. When you think about General Motors versus Tesla, okay, so it's a giant company making millions of cars, valued at 10% of what Tesla is valued at. And Tesla only makes 500,000 cars a year. But obviously, Tesla has mastered the story in the stock market. They caught the imagination of the stock market, of the individual retail investors, and obviously potentially being included in the S&P 500 on the next inclusion, potentially at the end of the year, will help them go higher. But not many people realize that GM has quietly been working on the whole EV story. They just announced an EV Hummer, which the pre-orders sold off immediately, and GM is catching up very fast on the technology, and the stock is only valued at 1/10 of what Tesla is valued. So again, GM is somewhere in the low 30s now. I think that's a $50 stock easily. The next stock, I think that's something people should focus on is Uber. Uber actually makes a ton of money despite the COVID-19 pandemic. They make a lot of money in Uber Eats. That whole division is firing on all cylinders because of COVID-19, right? So they make a ton of money there. But once we have a vaccine and people start going back to normal lives again, Uber is going to do very well. And finally, two more stocks I want to mention here is Disney. I think Disney is trading again below 120. If we get it closer to 100 in the below 110, I think that's another stock that people should pick, because on the other side of COVID-19, that stock will do well. And finally, UPS. I mentioned UPS in my last video. Again, here's the link above me. UPS was on the list of the conviction list. The conviction list is something Deutsche Bank produces every quarter, the best stocks they pick for the next 12 months. And UPS is benefiting a huge amount from obviously increased e-commerce, but also they will have an additional tailwind from how the vaccine will be distributed. They're investing heavily in those freezers to transport the vaccines around the world, and there's going to be a short supply of transportation facilities. So FedEx, obviously DHL and UPS all invest. UPS just announced results and went down, and I think that's a stock that again should eventually end up close to $200 per share, versus today I think it's around 150, 155. So again, these are, I think, stocks that people should focus on. If you think that, again, in the current volatility market and in the current sentiment, it's foolish to kind of think that you will pick the very bottom, right? So you have to think about which stories do I like and where do I want to be comfortably owning these stocks. If you're still at levels where you're uncertain about, is this the right valuation, you can always sell some puts with strikes at levels where you would be comfortable, collect some premiums, and if these options get exercised, you will obviously be along these stocks at these levels. So here's a quick update on the market pre-election. I wanted to post this video before obviously we go into the 3rd of November. This is one of my favorite days every 4 years to follow the US elections. Even before I lived in America, I love kind of following the wave as we move from one state to the next, from the East Coast to the West Coast, and obviously end with Hawaii, which always ends up blue. Hopefully this was helpful to you in terms of kind of understanding where we are, in the context of what the market is doing, how the market is selling off, and where you should be positioned for the next 3 to 6 months as we are approaching the end of COVID-19 when it comes to hopefully having a vaccine. So thanks for listening. Make sure you subscribe to the channel if you enjoy this kind of content, like the video if you enjoyed this conversation, and I will see you in a few days again.